Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of NEO, ticker symbol NIO. And so I am recording this on Thursday, August 14th during market hours because an important level was hit, did get stopped out on one of the contracts that I hold, but I did get stopped out in about 10-15% profit, so no big deal. But I did want to go over that with you guys, go over the chart here, as well as go over a couple of contracts in unusual whales, also going over max pain data so we can get an idea of where the stock price might be going. But really just beginning with the chart over here, I believe I did go over all of these levels in the last video, and this is really just, a Fibonacci retracement here going from the low that was hit on June 3rd up to the high from July 23rd, and it does look like that's locked into place, so I believe that is to the penny from the bottom to the top. We can see some Fibonacci retracements. And so we have pierced the 382, which is at $4.50. We have so far hit a low for the day of $4.37, putting in lower lows here. So maybe that doesn't look so good. But I do think that we are putting in a bull flag. Maybe I'm just being hopeful about that. I'm not really sure. Quite possibly, it is hopium, and that we do retrace down to around 350, and I will get into that based on options data in a minute. But there are still some levels here that could be acting as support, and one of them is still $4.50, being kind of like a psychological level there, in 50-cent increments corresponding with options contracts strikes going in 50-cent increments. We are below that now, so maybe this is a dip buying opportunity and we will reclaim that level. But what I find a little bit more compelling is actually coming down to the green line here, the 50% retracement, which is right around $4.28. And the reason why I find that to be a little bit more compelling is because of this blue line here that we can see coming across. That is the 200-day simple moving average, which we can see is currently at $4.27. So with that confluence of that 200-day simple moving average and that 50% retracement, I think that there could be some substantial support there. And also we do see this little bit of consolidation here before the next leg higher. And so the top there here from July 15th, that was at a price of the high was at $4.28, corresponding with that 50% retracement. So again, this will be acting as support, that consolidation. So I think we could go a little bit lower to around $4.28 to kind of, continue maintaining this bull flag scenario. Really, we want to see us respecting that 200-day simple moving average. But it is quite possible that we do break below it, we do go lower. And with that being said, we have the 618 here at $4.06, or right around $4, that again being a psychological level, not only being a whole dollar number, but also corresponding with some strikes for options contracts, and some coming up that might be acting, that level might be acting as a magnet, specifically, I believe, for this week. So do be cautious of that. And we also do have the 786 down here at 375. I don't really think that we're going down that way, but if we do, then I think that would be negating, this bull flag pattern. So really, a retest of right around 428. Find that as support. I think that could be the dip before the rip. So, I think that's looking pretty good. And then if I just want to see where this trend line's coming from, that looks like it's pretty approximate. So I might actually just delete that because I don't want to be thinking about that too much. Actually, why that's is this parallel channel? Yeah, I mean that's nothing. I'm not too or maybe if I switch this, sorry, a little bit of a tangent, but if I switch this to the log scale, that does actually look like, this parallel channel here. And we are at the top of it, looking like a bull flag at the top of it. So perhaps this is getting into a scenario where we really, break out of this downtrending channel, which goes back to, it looks like, the lows of March 2022. So yeah, and so just to put this into perspective, this is kind of a surprise to me. I was not planning on doing this. I'm glad I did not delete that, or at least brought that channel back. But so this is looking at it on the log scale. If I do switch this back over to the linear, yeah, it doesn't look like anything there. And so looking at this bigger picture, bigger time frame, macro time frame, that does seem like there is something there. And so, yeah, my thesis, if this is a bull flag and it is to break higher, that we could be heading up to around $6 or so. But I'm just going to switch this back to linear, and we can look back over here. Why did I say $6? If we do look over here, Fibonacci retracement going from the low that was hit on June 3rd up to the high that was hit on July 23rd, and then coming back down to around 428. Let's actually just see where these levels are. So that high is 521, the low over here, 335. So that does look like all of those levels are, right consistent. And so I have locked them into place. And that would be suggesting a move, a 100% move up to around 614, maybe $6. If we do go beyond that, or perhaps if I redraw that extension from the low over here from April 8th, I believe, was the low corresponding with Liberation Day, the tariff day or whatever, and then pull back. That could be suggesting like 642, 650, somewhere around there. So some possibility to the upside. But yeah, I would expect that this does continue a little bit lower to around $4.30. And if we do start to close below that, I would, really start to consider that this bull flag has failed and that we will be pulling down to, sub $4 range. So do keep that in mind. And since I am talking about $4, I did mention $3.50 earlier. I am going to flip now over to look at the max pain data, because I think that we could be seeing a little bit of a drawdown, whether that's just this week or maybe into the weeks ahead. And that is really going to be based on the max pain for tomorrow, August 15th. Max pain is $4, and we are currently trading in the sub $4.50 range, $4 to $4.50. And so maybe $4 could be acting as a magnet that draws us down tomorrow. So be cautious of that. But then if we look at the max pains for the upcoming 4 weeks, so that's August 22nd, 29th, and then moving into September 5th and 12th, max pain looks like it's $4.50. So while we are currently around that price, we are below it. And so closing below max pain, could just kind of be serving to suppress price, keep price down. So maybe that does serve as a cap, and that the bull flag fails, we do break down. And the next max pain up here for September 19th is $3.50. We are above that. I don't think that we're going to go back down to $3.50. So maybe by that time we actually bounce around $3.50 or sub $4, and that ends up being a really nice dip buying opportunity. Or maybe we reclaim $4.50 and start to gamma squeeze up to $6, like I was saying, with these max pains here. So do keep that in mind. But with $4 tomorrow for Friday being the max pain, I think that price might be pulled back down to that, but then maybe we slingshot off of that level and then reclaim $4.50 the following week and start to close above these max pains, gamma ramping, especially with $3.50 for that September 19th expiration. So do keep that in mind. But speaking of that, the September 19th $3.50 max pain corresponding with that expiration. If we do look over at the contracts, this is actually the contract that I did get stopped out on. This is the $3.50 call that expires in September on the 19th. So just about a month between now and expiration. And so I had one contract at an average price of, I believe, 86 cents. Unfortunately, looking at the low here, 98 cents, that was me getting stopped out. I had a stop loss placed at $1. Got executed at 98 cents. Not a huge deal. I did make a little bit of money on that, but if I would have sold, a week ago, I could have made, $50 more, $55 more, considering the high that was on August 11th. So that does kind of suck, but profit is profit and risk is risk. With the expiration being just a month away, it is possible that NEO does get pulled back down to 350. Maybe the bull flag fails. So I'm not too concerned about that, but I did just want to mention it, that I did get stopped out of this position. I have not rebought it. If the price of NEO does come back down to like 428, maybe it looks like there's support, and this contract does look like it's getting bought up, maybe I would reconsider entering that position. But instead, I did buy a different call, and I'll talk about that one in a second. But I did just want to go over the historic volume over here. I have talked about this contract in the past, and that there has been some selling, as you can see here in the red. But open interest has remained pretty close to 200,000 contracts being open. But I believe the last video that I covered on NEO was when it did dip below 190,000 contracts open. We can see that there has still been some selling following that, but that selling, in my view, was really just corresponding with taking some risk off the table, taking some profit, managing that risk, while still holding a pretty large position open. Because I think if I do scroll back down here a little bit, yeah, there's this one day. So on July 11th, there was a pretty massive order, not July 11th, on July 10th, there was a massive amount of volume, about 175,000 contracts that led to an increase in open interest of about 165,000 contracts increase, and the open interest going from about 10,000 to about 175. That has since increased and is now at, 189,241 contracts still remaining open. So I still think that's good. We have seen some buying recently, but they haven't been like huge buys or anything. So this is like retail, just like little fishes like you and me buying this. Although, I'm not buying tens of contracts at once. I just do like one at a time. So no big deal for me. This is a big deal though. For these buys relative to me, because I'm just like a one contract at a time kind of guy. But yeah, so I think that's something to note, that this has flipped from, selling, trimming to buying. And so maybe that is marking a bottom with it, but it hasn't really been super exceptional. And so I did mention that I did sell my one contract with this at a profit, but probably near the bottom. As we can see, the low for the day still is 98 cents. And so what I did, I had picked up two of these contracts previously, the $10 strike call that expires in June of next year. So on June 18th, about 308 days between now and expiration. And so I had two contracts. I think my average was around 32 cents. I decided, well, since I sold that other call, I might as well roll some of that profit or some of that position into this lower risk contract, because we got so many days between now and expiration, although these are deep out of the money contracts versus this other one being deep in the money at 350 strike, current price trading around 450, so this is a safer bet, but with that time frame, it is risky. This one, for me at least, I'm a little bit more comfortable with this, also with that premium being so cheap. And if we do look at these orders down here, there's a little bit of a difference between this one and the other one. We've seen a good amount of selling, a good amount of trimming in the past for the $3.50 strike that expires in September. But for the $10 strike that expires in June of next year, we've actually seen a good amount of buying. And so on August 8th, so I guess that would have been last Friday, we saw a volume of over 1,200 contracts traded, which led to an increase in open interest of about 1,100. And so that open interest, is trading right around, or is not trading, but that open interest is actually above 60,000 contracts right now. So that's actually looking pretty good. And so I did actually buy at the low so far today, and you can actually see my buy in the data up here. It's just one contract, so it's pretty small, and so it's at an average fill of 27 cents. So 27 cents times 100 shares per contract is $27 what I'm risking with this addition to my position. Just one contract there. You can see the ask is 1. And so that is me. Pretty cool to see my order in the data here. And yeah, I just feel like this is a safer bet for me. And, I can just swing this later on for, a profit. Whether or not price does get up to $10 doesn't really matter. But if the price action does start to move bullish, starts to move towards $6, this contract could go from $27 average fill or 27 cent fill per contract to like $1, and that would represent $100 to buy one of those contracts or $100 to sell. So that would represent some nice profit. So I do feel good about that. But then I also wanted to talk about the data over here that we can see. Actually, I believe when I decided I wanted to start recording this video, before I started recording it, net call premium was actually down a little bit. But if we do look at it right now, we see that net put premium, so in the red, that is still negative. It's been negative throughout the day. That's negative over $500,000. So the net put premium has come down by about $520,000, whereas net call premium is actually positive by about $4,000 currently. Whereas, just about, I feel like half an hour ago, somewhere around there, the net call premium was negative $300,000. So while that is negative, it's not that great. The net put premium is more negative. So that makes me think people are more bearish more bullish selling more puts than they are selling calls. They're more bullish than they are bearish. They're selling more puts or selling more put premium than they are selling call premium. But then it looks like that dip in the call premium has been bought up. It's gone back up there. So I think that actually looks really good. I was not expecting that. I was just expecting to make the argument of the negative put premium is more negative than the call premium, which is actually now positive. And so I also wanted to just go back over the past 30 days just so we can kind of see, what's been going on with this. In yellow, we can see that the price of the stock has gone up and consolidated. So that does look like it might be kind of a bull flag, as I've talked about. So that looks good. We haven't seen anything too out of the ordinary, with the call or put premium. We did see some spikes over here where, net call premium was up by over $3 million. And then over here up by nearly $3 million net call premium increase. And with that, we saw the stock price in yellow go up. But since then, with this consolidation, call and put premium has been, just kind of up and down, nothing too crazy. But we do see this little drop in net call premium here. It dropped by about $1.5 million, whereas net put premium increased by about $1 million. And so I'm actually going to zoom in on that so we can look at it, just show you how to do that. I'm just going to expand this chart into a new window. And so that actually, before I skip over to here, this was on, August 12th when we had that drop. So we can actually look back at that day specifically. So I'm just looking at one day over here. I could go back a few days to look at that. But what I am going to do is just rewind a couple days into the past. So now we are looking at August 12th. And we can see that net call premium did come down on that day by, looks like $1.42 million decrease in net call premium. So that's bearish. And on that day, we also saw net put premium increase by over $1 million. It looks like $1.02 million, that red line going up. And so this is actually looking really bearish from a couple days ago, because you've got $1 million buying puts, betting that the price will go down. And then you've got about $1.42 million selling calls, likely selling calls. It could be selling, could be buying, but with the premium decreasing, that suggests people are getting out of positions, whereas the increase suggests people are getting into positions. So the increase in net put premium, bearish. The decrease in net call premium, also bearish. So this did not look too good a couple days ago. And with that being said, from a couple days ago, this was on, the 12th, we saw this gap down, red candle here, we are going lower. So yeah, I mean, that was followed by some bearish activity here. But like I said at the beginning of the video, I do think that we could be retesting this 200-day simple moving average, as well as this 50% retracement around 428. Also kind of corresponding with the tops over here, so that could be acting as support along with the consolidation here. So if we do get a little bit more of a pullback, I wouldn't stress about it. I would just think about the possibility, the likelihood, in my view, that this is going to be breaking out to around $6, because, I mean, like a year ago, that happened again. Look at this. We had upside move consolidation for quite some time before a continuation higher. And then so over here, upside move, consolidation before potentially a continuation higher to $6, maybe to $7.28 up here. I have no idea. But for me, I am just trying to manage risk with contracts that expire soon, making sure I am on the sidelines with those. And, then repositioning to contracts that expire later. But yeah, currently, as I'm recording this, price is at 441. Like I said, I think it could be coming down to around 430. If we do break that, and we do head down to $4 corresponding with max pain for tomorrow, do be cautious that could be a signal that this bull flag has broken down. But as of right now, I think that we are still in that range, even if we get down to 430, 425, somewhere around there, maybe 420, good luck number, that I think that we could be going higher. But if we start to close, like I said, below that 200-day simple moving average, I would be a little bit concerned about that. We get a couple closes, maybe it's a fake out, a couple closes below it, maybe it's fake out. I mean, just like over here, we saw kind of a fake out break above that 200-day moving average before pulling back. Even over here, we saw one close above and then we pulled back. So good to keep that in mind. If we do go a little bit lower, it could be fake out breakdowns before, like I said, launching up to 6. So that is what I am hoping. I am still pretty hopeful with NEO, and I will let you guys know if that changes, if this does start to break down and we start to head towards 350. But anyways, hopefully this was helpful with you guys. As always, those are just my thoughts. If you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Happy Thursday, and I'll see you in the next one. Take care, you guys.